is the reason why I do it, is because I have siblings that are, so my mom passed away 10 years ago, and I have a sister that's 13 years younger than me.
Okay.
So just being that role model for her, and then now I have nieces that are young, and then being that role model for them too definitely keeps me going.
Hi, I'm Mike Grambow. I'm a loan officer here at JMJ Financial, and we have Laine Warthan today in the Mortgage Lounge. Laine is a top producing realtor on the Anderson Real Estate Group, and the Anderson Real Estate Group is the top realtor group in Long Beach, California. So it's really an honor to have you here.
Thank
and
you.
I'm excited to learn more about your story and everything you do.
Yes, thank you.
So who is Laine Warthan?
Who is Laine Warthan? Good question. Well, I'm originally from Virginia. I moved out here 2012, so wow, almost like 14 years now. 14 years? Anyways, yes. So yeah, I moved out here on a whim, really. I had just like finished up school and just came out here to visit, and then moved out here literally like the next year. Wanted to focus on fashion. I actually do have a clothing line brand called Laine Change. Yes.
Oh, I like that.
Took a long time to do that, but then come 2020, I got let go of my job that I was working and started doing a lot of reading and investing and things like that, and then decided to jump into real estate. So that's where I am now.
Interesting.
Yeah.
I also came to Southern California in 2012.
Really?
Yeah.
Oh.
Yeah, so
Love
something must have been in the air.
Yeah,
right?
I know. Everybody must have had the move bug, so.
Yeah, exactly. So when you say investing, you talking real estate investing or something
Yeah,
else?
well, I was just trying to learn more about how to make your money work for you and not work so hard. So I did a lot of reading on investing, and that was kind of my in into real estate, was working with investors and doing wholesale stuff, which actually let me, learn the market really well, which was cool. So I can run numbers with investors and margins and all that stuff, ARV and stuff. But yeah, so then after doing that for a little bit, I wanted to dive more into the residential stuff because I think helping families and people was something that drove me a little bit more. But yeah, that's pretty much.
Interesting. And so on the moving to residential, so on the wholesale side, you were dealing more with commercial real estate?
I did commercial, multifamily stuff, but yeah, residential, but it's not the same. You're just dealing with investors, which is fun, but it's just more fulfilling to help families. Yeah.
In my observation and experience, when you're working with real estate investors, it's more business. It's more
transactional.
That's a great word. It's more transactional.
Yeah,
and sometimes for better or for worse, right? Because working with, especially first-time buyers, it is a very emotional experience for them, and like they just feel like you're walking into the dark. You don't necessarily, even though you've been told by your lender and your realtor this is what's coming next, like you've never experienced it before, so you really don't know.
Yeah, and I think you first-time home buyers need a lot of reassurance, which is fine, because I know it's a big investment for them. It's probably one of the biggest investments that they've done in their whole lives, so I'm there for that. So yeah.
I like to joke with people because that line comes up a lot, right? It's your biggest investment you'll make, and then my joke is, if it's not, then we should be best friends, because whatever you got going on is a good thing. Yes, right. Very true. Very true. So did you start at Anderson when you made that switch, or were you somewhere else before that?
No, I started with Keller Williams. I was there for a little while as a solo agent. I was only doing maybe but going back to the investors, so a good thing about working as investors is they'll give you the relist on the home. So once I kind of branched out of that and went solo, a lot of those investors that I worked with and sold wholesale properties to, they actually gave me the relist. So that's how I was able to have a couple of deals and transactions in my first couple of years. But I was only doing 3 or 4 deals a year, and I just wanted to do more, and I've heard from other agents, usually when you start, you should start on a team, because they just help you navigate everything. You have the coaching and the support there for you. So yeah, I had just moved to Long Beach, and I was looking for an office, actually, and I was looking for better splits, and that's why I really joined EXP at the time, because they did an 80 80-20 split, I think it was. But then I was looking for an office, and crazy thing is I was doing a spin class at Iconic's gym off Ocean Boulevard in Long Beach, and Tori and Jeff were actually in the class. Tori was the spin instructor, and they had mentioned that they had a team or did real estate. So I asked them a couple times, where I could find signs or where I could do this or where I could find that. And then eventually I was like, I had just joined EXP, and I was just like, and I saw that they had an office there. And it just aligned all so well.
Yeah.
It was just like, and it's crazy how when the dots connect like that, and it was like, okay, this is where I'm actually supposed to be. And that's kind of how it felt for me in that moment. So, yeah.
It's so funny because I think that just when you have a business, people say do the things that you enjoy doing and business can come from it. And my philosophy on it is do them because you like doing them, not because business is going to come from it. Like if you just put yourself into it as though you weren't seeking business, the business kind of organically comes.
Yes,
and that's
true.
like exactly what happened in this
true.
particular case.
I like that.
Right?
I like that point of view. Yeah, you're right. It's true. Even in real estate, because it's hard. Like it is a hard, and it's persistence, and you have to keep going no matter what if you want to make it. But yeah, I mean, you just have to love what you do for it to be something that you want to do every day. Even when times get hard, you just have to remember your why and like why you do it. And then also having the support in the team to lift you up, I think is important too.
It really is.
Yeah.
Well, that's a great segue into what is your why? Like there's 100 ways to invest and so many businesses you could have gotten into. Like what is it about real estate that keeps your hunger for it?
Yeah, so investment. So my end game is wanting to do investments, learning all of that. But my real why, and I think about this and I come back to it, and I think this is the reason why I do it, is because I have siblings that are, so my mom passed away 10 years ago, and I have a sister that's 13 years younger than me.
Okay.
So just being that role model for her, and then now I have nieces that are young, and then being that role model for them too definitely keeps me going. I think that's the main thing for me. Yeah.
Is it just overall career success, or is it specific to housing in some way?
I think it's overall in general, like being in California, that's a big thing that my family talks about often. Being able to be here for so long, but also being, thriving out here and being able to set the standard, I guess, that knowing that being a woman, you can do whatever you want to do.
Yeah.
You can move wherever you want. You can do whatever career you want, So I think that's important.
Yeah, no, it's super cool. And, we talk about the people that are going to follow you, and whether it is just from a mentorship standpoint or even from a housing standpoint, like, we've worked on the California Dream for All program lately, and really the first thing you ask for that program is, are you a first generational buyer? And the reason California did that is because they see the importance of owning a home and how generationally it provides wealth and stability and so many things, right?
Yep.
So if the state of California thinks it's important, it's probably a good hint that it's pretty important.
Absolutely.
Right?
Absolutely. I think, even so in Virginia, things are a little bit cheaper. California's expensive, but owning a home was definitely like, in society, people are supposed to own a home, have a family, things like that. So I think it is important and impactful when you do own a home, because you're also learning that assets are, better investments than doing the renting stuff or whatever. But yeah, I think, having a family and doing, owning a home is important for sure.
Yeah. I find that they say you become your parents, right?
Yeah,
and
it's true.
It's like it's because you eventually figure out for yourself that all the things they've been telling you to do, there's a reason behind it. And even if sometimes it felt pushed and it was unwanted on your behalf, you're like, oh, they were just looking out for my best interest.
Yes.
So the housing part is like, yeah, it's a financial investment in many ways, right? But it's also a stability thing for when you have a family and you're taking those steps. And not that you can't raise a family when you're renting, but there is just a certain security and familiarness that housing brings.
Yes, I agree. I do agree.
Yeah. So if somebody were to ask right now, is now a good time to buy, what would be your advice to them?
I think the media plays a huge impact on that. But honestly, my answer is yes. It's always a good time to buy because even if it's not your forever home, just getting your foot in the door in the game of real estate or owning a home is important because, especially in SoCal, the appreciation rate is like so much higher than other states. I actually just had this conversation with the client yesterday, but even if you have to do a starter home with a condo, and in 5 or 10 years, then sell that. You can pull the equity from that, use it on another down payment for your forever home or a house at that point. But I think, it's always a good time to buy. Even I know pricing and interest rates and all of that play a big part in buyers' minds as well. But there's way around the interest rate. You can do a buy down, or you can figure out different ways, or do the down payment assistance. Looking into different programs is very important because California does provide a lot, just like the CalHFA Dream for All. But yeah, I do think that it's just always a good time to buy if you can. If you have the funds to do it, yeah.
And people say that. It's funny you say it just because when I bought my first home, it was before I was in the business, and we had a family friend that was a realtor, so naturally you go and talk to them and you're figuring it all out.
Right.
And I asked the question, is it a good time to buy? And she smiled and said, it's always a good time to buy.
Yeah, it's true.
And at the time I was like, oh, what a lie.
Yeah, I know. I think that's what I think that's what most people think. Or they think the market's going to crash, or who knows. But we also live in SoCal. Everybody wants to live here.
Yeah.
Well,
and now that I'm in the business, I agree.
Yeah.
It's always a good time to buy. And just for a couple of reasons, right? It's like from just a stats standpoint, if you look at years when you have appreciation versus years that homes depreciate, I'll take that bet every time.
Absolutely.
Right? Because yes, there were a few bad years, particularly during the Great Recession, where homes really took a hit in their values, but for the most part, it's really, really consistent. Right. And then, if you had bought a house and owned it prior to 2021, in 2021, you got 20% appreciation in a single year.
Yep.
And, we talk about the housing piece of it and the stability piece of it. I find that to be one of the biggest drivers of just where are you in your life, and does it make sense for you to get in? Because housing continues. We're talking about appreciation. It does continue to get more expensive, which is hard when you're the buyer. It's great when you're the owner. Yeah. And when one of the things that I see is that people start and they're single and they could have bought the condo, as you said, studio or one bedroom, but no, I don't. It's not the right time. Right. I'm trying to time this up. Right. Fast forward, and it's like, well, now there's 2 of us. Well, now we don't want the 1 bedroom anymore. We want the 2 or 3 bedroom. Right. But we can't afford that. Okay, we're going to wait. And now we have 2 kids, and it just keeps growing, and they price themselves out because their needs have grown, but they weren't able to grow equity all that time. Right. No,
that makes complete sense. I mean, timing the market. I hear that often too. Like, when's the right time? I think, yes, it needs to make sense financially for you. Like, I'm never the one to pressure, like, you got to do it now, because it has to make sense. But yeah, I mean, timing the market in general is just like, when it comes and it goes so fast, if it is the right time, like COVID times, right? The rates were super low, and most people are now kicking themselves because they didn't buy during that time. But also during that time, there was so much competition. There was lines around homes in order to get into an open house, So I think if you have the means, just do it, and then it'll reward you in the future. Like, for example, I just sold this home in Upland. They bought it in 1980 for like $10,000 or something, and we just sold it for like $650K. Yeah. Do you know what I mean? So it's just like the appreciation on SoCal properties is just wild. It's the most lucrative compared to everywhere else. Yeah.
And when you talk about trying to time up the market, it's so tough because most people will get their information from the media, but the media is always usually a step behind. Right?
That's true. That is true. Even talking to my clients now, I mean, the whole war thing, right? It's created so much inflation when we were just starting to get momentum. Like, we were getting the rates under 6%. They had just, and I actually got a couple of buyers, and I'm like, look, now's the time. And the smart ones, not saying that people are smart, but the smart ones moved ahead and listened to me rather than listening to the media, because the media was still portraying that, you know, it might not be the right time, still a seller's market or whatever the case may be. But during that time, it was actually shifting to a buyer's market, and I was able to get my clients a really good deal and a interest rate under 6%.
Yeah,
so, yeah.
Just as a general rule, if they say if it bleeds, it leads, right? So it's better for clicks if the market's crashing. And
Yeah,
I mean,
that's
there's
true.
people out there, that's their career, is that through all these different cycles we've had with real estate, they're still saying it's going to crash, it's going to crash. And I mean, there's one in particular I'm thinking about. There's no data involved in this at all. You know, you pull up a map and, oh, look at all this and that. It's like, that is the least scientific way to necessarily go about it.
Yeah, I agree. I think in other states they are seeing some decline in market, but like I said, SoCal, I've only seen the prices decrease slightly. I think it was like last year, the end of the year. But it was so minimal.
Yeah.
It was, and you know, now they're right back up to where they were. And sellers are out there and, you know, selling their property, because I think people took a pause for a moment last year, like at the very end, but it was actually the greatest time to buy, probably compared to now. But hopefully inflation does, you know, go down, so these rates can go down too.
I think there's pros and cons in every market, right? There's advantages of buying in the spring and summer. There's more inventory, more options for you.
Yes.
If you buy in the winter, there's going to be less options, but real estate is cyclical, and that tends to be the time of year when you're going to have the lowest prices.
Yep.
Now, if you compare February 26 to February 27, I'll put my money on that February 27 is going to have higher prices, right?
Yep.
So, yeah, it's so hard to time it up. You know, we talk about the news cycles. Just take mortgage, for example. I'll chuckle at the headlines and the calls I get, because we get them in live time. Like, sometimes rates they change every morning, and then sometimes you can have a price adjustment in the middle of the day, or even 2 times a day if it's a really volatile day, right? So we get it in live time. There's a national average that comes out, and that's usually lagging a week behind. So the Freddie Mac national average is looking back a week, and it's an average.
Okay.
Right?
Yep.
And the news media gets it and takes them to write an article, and that takes a week. So oftentimes, by the time the headline comes out, they're talking about rates that were 2 weeks ago, which are entirely obsolete at that point. Right? So trying to keep up with lifetime of what's actually happening, and then some of the bias of it bleeds, it leads. I feel like relying solely on the media it's really hard for your average buyer.
Yeah, I think that's why you need a professional in your corner to kind of guide you. That doesn't like really pressure you, but just guides and gives, like, you know, the best information for you to make the best decision for yourself. When do you, for lending purposes, when do you think is the appropriate time for a buyer to reach out to you?
I don't think there's a too early.
Okay.
Right? Because at the very least, we can have a conversation. I can do some back of the napkin kind of numbers and say, this is where you're at. Based on what you've told me, these are your potential holes that you can work on. And like, there's no cost or commitment or anything for somebody to do that with me, and to just get them a baseline, right? And if I think that they are in a place of like, hey, what you're telling me matches the goals that you're telling me, and like, this is going to be the next step if you want to take it, kind of thing. But otherwise, I think that there is a too late, right? There's the other end of it where somebody didn't want to get pre-approved for a multitude of reasons, maybe some misperceptions about the process. Some people don't like talking finance and numbers, right? But then the house they really want comes and they're not ready, right?
And then it comes and goes. And then it's also, you know, leaving money on the table when you're not able to get the pre-approval in time, because at that, like, a home that has a lot of people going after it at once is competitive. And if you're not ready to go or have your pre-approval ready, then you might pay more for the. So for lending purposes, sometimes I tell clients, you know, sometimes you want to have 2 lenders in your pocket to be able to just see who's going to give you the best deal, right? Because, and I speak about leaving money on the table sometimes, because if you're just pushed into a corner with a lender that you just met at open house or something because they're there and it's convenient, they might not be giving you the best, advice or the best deal, or giving you not the best incentive sometimes. Yeah. So.
Yeah. Do you want to go on more than one date, right?
Yeah.
Yeah.
Definitely.
Yeah. And with lending specifically, I think that it's true with any kind of purchasing decision that you're making, right? There's a price component, which matters a lot. I'm not saying it doesn't, but then there's also a quality component, right? You don't go to the store and buy the wine on the bottom shelf every time,
yeah,
right?
Box wine.
Yeah, right. It's like quality, just like in anything else, there is a difference in quality with mortgage, and some of it's in processing, some of it is in advice, and some of it is, like you're saying, just in some trustworthiness, right? Of like, I don't understand what's happening. I really need somebody I trust that can help guide me, give me different options, still allow me to make decisions for myself, but in the most informed way possible.
Yep, I agree. What else? As far as lending goes, what are some beneficial programs? Or I know there's like a 2-to-1 buy down. Can you speak more on that for us?
Yeah. So the 2-1 buy down is a way to lower your monthly payment. So for a lot of people, the biggest challenge in owning is just that monthly payment that you got to come up with every single month. So what a 2-1 buy down is a way that you're essentially having the seller pay for part of your payment for the first 2 years.
Oh, okay.
Yeah. So the 2 means that for the first year, the payment you're paying is as though the interest rate was 2% less. So not a quote, just arbitrarily saying, let's say the rate was 7.
Yep.
You're making your payment in that first year as though it was 5.
Cool.
The difference is coming from the seller, and they give you that money at the time of closing.
Okay.
And then the 1 is because it's 1% less the second year, so now you're at 6%. And then in year 3, it goes back to whatever the rate was in this example, 7.
Okay.
Right?
And then, if you do have a 7 interest rate, hopefully by the year 2 or 3, we're hoping that rates would maybe come down, and then you could possibly refi.
Yeah, absolutely. So you can refinance, and this nice part about this kind of loan, so in a traditional loan, if you were to pay points or buy down the interest rate, that's money up front, that's a one-time fee, and if you refinance, it's just gone.
Nice.
Right? In a
then it's gone.
It's gone.
Okay,
yeah.
Gotcha.
In a temporary buy down, where you're getting this money from the seller, that's sitting in an account with your mortgage servicer, and if you refinance, they give it to you. It comes off of the loan balance.
Okay.
So it's beneficial in that way that, credits that you negotiated, they don't just evaporate if you decide to refinance.
Okay. I think that's a learning curve for a lot of people because they don't even know about that program. Any other programs that could help buyers or first-time home buyers?
Yeah, so I like to tell people, don't try to get too caught up with, I need a first-time buyer program or anything else, because so much of owning the home is long-term and the family situation, like we talked about, a personal situation. But with first-time buyers, there's down payment assistance that you can get. So once again, just in that theme of getting into the market, there's ways to lessen the amount of cash to close that you need for that. If your income is in a certain position, you can get discounts on your rate.
Okay.
You can take it as either a discount to your rate or credits to your closing costs. So just another way to come in with less cash to close.
Yeah.
And particularly in California, there's certain census tracts that qualify for special programs as well. And that could be smaller down payments, not requiring mortgage insurance, that same deal of having lower interest rates or taking maybe credits towards your closing costs, just because you bought into a particular census tract.
Yeah. And people think that you need 20% to get a down payment to get your home. Is that always true, or are you able to do less?
I was about to say it's never true, but that's not entirely true. So, but it is probably the biggest misconception in mortgage, right? So for just a traditional conventional loan, 3% down on a first-time buyer is the minimum.
Okay.
FHA is 3.5. In Orange County, you can get an FHA loan up to just about $1.25 million. So definitely don't need 20% down. And when you put less than 20% down, you do carry monthly mortgage insurance.
Yep.
And it's a funny cycle that this goes into, because before you did need 20% down. So this thing was invented called mortgage insurance to help people buy homes without having to need so much money.
Okay.
And over time, that somehow became the devil.
Yeah.
When it was invented to be a tool.
Okay.
Right?
Yep.
So, and yes, there's instances where it could be a little bit expensive, but just if you have a decent FICO score, even if you're doing 5 or 10% down, then it's really minimal. If, let's just say your insurance is $100 a month, which in many cases is realistic, right? Then you would say, okay, $100 a month over 2 years is going to be $2,400, right? I bought a house that's $500,000, right? And if that house appreciates just 2%, right, that's 10 grand.
Yep.
Just in the first year.
Yeah.
Right. So the appreciation you get and the equity growth from just owning far, far exceeds what the mortgage insurance is going to be.
Okay, that makes sense. I think people don't really realize that or know about the PMI, the mortgage insurance stuff. Yeah.
And with conventional loans, it could be removed. And with, once again, talking about the appreciation factor, many times it's removed in the first 2 to 3 years of the loan.
Yeah.
It depends on how much appreciation you had and how much you initially put down, but I would say that more loans than not that I have done, they've removed insurance within 5 years.
Okay. Nice.
Mortgage insurance.
Nice.
Yeah. So, Laine, how can people find you?
So I'm on Instagram, sold by Laine, Laine, or the Anderson Group in Long Beach.
All right. Awesome. Well, thanks for being here today, and thanks for tuning in to the Mortgage Lounge. And until next time.
Okay. Thank you.